correct. We just actually had another price increase a couple of days ago. But like I say, we're looking at a long-term price forecast. And with these gas fields, we'll produce most of our revenue in gas within the first 3 or 4 years. And we believe we'll be in the $9 to $8 range over that time. We really only pay $102,000 US a month. So when we're at the high production, it's at 11 cents. So it's an extremely low-cost producer.
Perfect storm on the upside for Trillian.
The Financial Survival Network. Now more than ever. The Financial Survival Network.
And welcome. You are watching the Financial Survival Network. I'm Kerry Lutz. Hey, it's time to get a sponsor update from our good friends at Trillian Energy Corporation. And CEO Art Halloran is with us now. Art, it's always great to talk to you. How are things going there?
Thanks for having me back on again. They're going very well.
Very well. So let's talk about, there's 3 areas I wanted to touch on this interview. Number 1 is existing cash flow. I mean, we see the price of oil, depending on what day it is, you probably get a good idea. But right now, your cash flow on your existing Centauri oil fields is way, way higher.
Yeah, that's correct. So we've already made about 2.7 million US so far, and we'll round out the year at $3 million US. And at the same time, though, we also are getting over $10 an MCF for our gas that we're still producing from SASB. So we're getting a fairly good revenue and cash flow. Plus, we still have about $1.5 million US in our treasury from our warrant exercising. So we're in pretty good shape.
So let's talk about nat gas. As far as what the price of nat gas, what it's going for now in Turkey, in that area, how much are they getting per million BTU?
So right now we are getting about $10 US for and when we did our reserve evaluation, because according to regulations, that was December 31st. At the end of the year, we were at the lowest price we have ever gotten. It was slightly above $5.46. So our reserve and resource evaluation, our NPV10, were based on that price. And with the uplift now that we're getting, we have gone back to the third party and have gotten a updated report with the new pricing. And we're not saying, okay, we're going to get $10. We feel that it's going to back down a bit to $9 to be more realistic. And with that correction, we have added across the board a value of $20 to $30 million for each category. So our medium case used to be about 140 million. We're now 170 million. And then the larger case, we've also added 30 to 40 million dollars US. In addition to that, of course, the cash flow per month also has really been upsized. So we're going from about 1.8 for the first couple actions, and before it was going to go up to about 2.4. It's going to be going well over $3 million free cash flow per month.
So this has really changed the entire complexion of the project and made it much more compelling on a financial basis for sure. And so while gas prices could go lower, they could easily go higher as well.
Yeah, that's correct. We just actually had another price increase a couple of days ago. But like I say, we're looking at a long-term price forecast. And with these gas fields, we'll produce most of our revenue in gas within the first 3 or 4 years. And we believe we'll be in the $9 to $8 range over that time.
All right. And what is your cost of production per million BTU?
Yeah, so it's for MCF actually. And once we get our good production going, because we really only pay $102,000 US a month. So when we're at the high production, it's at 11 cents. So it's an extremely low-cost producer.
That is remarkable. That's got to be one of the lowest around. And the beauty is you don't have a lot of infrastructure that you got to build there. You just have to drill the new wells and tap into the existing infrastructure, correct?
That's correct, and that's why it's fairly inexpensive. So what we're doing is we have the existing infrastructure, And so we're going to capitalize on that. We have the existing gas fields that are just sitting there to be re-drilled and put into this infrastructure. And now with the high price, it's a perfect storm.
Perfect storm on the upside for Trillion. And of course, we need financing to actually build these new platforms and drill these, spud these wells. And how is that coming along?
Yeah, so we're redomiciling in Canada. And the reason for that is when we looked at the money raised, it was going to cost us, by staying under the SEC rules, it was going to cost us a minimal of $400,000 US due diligence fees. And then they were talking about a 4 to 5 month. They actually said 3 months, but I know if you get lawyers and there's $400,000, they're going to spend time to spend that money. So you're talking 4 to 5 months. And that is to be able to say, okay, now we can start the raise, redomicile into Canada. It's only about a $50,000 to $60,000 process to get the paperwork for the raise, and 6 weeks. So we have the vote on December 17th for the redomiciling into Canada. And once we have that vote, shortly after that will be our release that we will get the financing.
All right, excellent. Hey, and we should emphasize that the shares are still going to trade on the OTC under the ticker symbol TCFF, correct?
That's correct. And also in Frankfurt, everything stays the same. And what will happen, it'll just get one new Trillion BC, basically, company for the old share. So everything stays the same.
Yeah, so as a shareholder, you're not even going to notice this, although I would assume your annual filing fees, as well as your cost of due diligence for this round of financing, is going to go down.
That's correct. And also the amount of work, because right now we're in 2 jurisdictions and we have to double everything. So it makes it a lot easier and just makes sense.
Yeah, and that's for historical reasons that we don't need to get into. So this is really modernizing the capital structure of the company, or I should say modernizing the corporate formation or format of the company as a Canadian company, and makes a lot of sense. You're headquartered up there. So like we said, there's historical reasons. So once the financing takes place, you've identified 9 further targets where natural gas is present, and that's gone from a good shot to like very likely that the gas is present there.
Yeah, so what will happen is that we will have the vote on the 17th, and then starting January 1st, the first week of January, we'll start doing the marketing, and we should have the money by in February. And so for that part, we have Program A. That is the known drilled but non-produced gas fields. There's 4 of them, and it'll be 1 low-risk development. We'll be doing those 5 drills, and then 2 behind pipe recompletion, so the gas is there. Like one example, I have a tubing that's bent and stuck, and we need the rig to actually pull that out. So that'll be the first big shot in the arm for revenue and gas production. All right.
Well, pretty exciting times for the company. If you need to find out more, you want to find out more, go over to trillionenergy.com. The tickers in the U.S., TCFF. In Canada, TCF. Art, exciting times. Wish you the best. And we'll talk to you again soon for a follow-up. And hey, as a shareholder of Trillion, I'm also personally excited. So we'll talk to you again real soon.
Okay, yeah, thank you very much. It's always a pleasure.
The Financial Survival Network.